The current price trend for Bitcoin suggests a potential for short-term decline. The recent price history shows a fluctuating pattern with a downward bias, and the forecast price indicates a continued downward movement in the coming week. Considering this bearish outlook and the support price of $92,780.55, a short-term short position on Bitcoin appears to be a suitable strategy. An optimal entry price for this strategy would be around $94,200, allowing for a small cushion above the current price while capitalizing on the potential downward movement. The stop loss should be placed at $94,780, slightly above the resistance price, to minimize potential losses if the price unexpectedly surges. The target price for this short position could be set at $92,780.55, aiming to capture the potential decline towards the support level. This strategy prioritizes risk management by setting a tight stop loss and capitalizes on the anticipated short-term price decline in Bitcoin. Given the price trends and forecast for Bitcoin Cash, a cautious investment strategy would focus on a medium-term approach. The historical prices show some volatility, with the price fluctuating around the support and resistance levels. The forecast indicates a potential decline in the coming week, but the support price is relatively close, suggesting a possible rebound. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $440 would allow you to buy in at a relatively low point, while the stop loss should be set at $435 to protect against a further decline. The target price should be set at $469, aiming to capture a significant portion of the potential upside. This strategy allows you to capitalize on a potential rebound while managing risk effectively. Based on the provided price information for stacks, a cautious investment strategy leaning towards the short side appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting further declines. The support price sits at $1.582, while the resistance is at $2.457. This indicates a potential for stacks to continue its downward movement in the short term. Therefore, an aggressive short-term investment strategy would involve entering a short position at a price slightly above the current price, around $1.62, as a conservative entry point. The stop loss should be set at $1.68 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.46, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop-loss order. Based on the provided Ethereum price data, a cautious investment strategy focusing on the short term appears to be most suitable. While the historical prices show some fluctuations, the recent downtrend and the forecast indicating further declines suggest a potential for short-term profit by capitalizing on the anticipated price drop. Therefore, an investment strategy involving a short position is recommended. A suitable entry price would be $3,360, aligning with the recent price action and the forecast. The stop loss should be placed at $3,410 to minimize potential losses if the price unexpectedly reverses. The target price could be set at $3,290, which is slightly above the lowest forecasted price, allowing for profit-taking before reaching the potential support level. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Given the price trends and forecast for Ripple, a short-term investment strategy is recommended. The historical prices demonstrate a recent upward movement, with the current price hovering near its forecast and support level. However, the resistance level suggests potential for a price pullback. Capitalizing on this potential, a short position is advisable. An entry price of $2.28 aligns with the forecast and allows for a reasonable profit margin. A stop loss should be set at $2.34 to limit potential losses if the price unexpectedly surges. The target price is set at $2.16, slightly above the support level, allowing for a secure profit before the market potentially rebounds. This strategy aims to capitalize on the short-term volatility of Ripple and generate returns within a relatively short time frame. Based on the provided information for Binance Coin, a medium-term investment strategy appears to be the most suitable. The historical price data reveals a generally upward trend, with recent fluctuations around the $700 mark. The forecast suggests continued growth, reaching around $714 in the coming week. This indicates a positive outlook for Binance Coin in the medium term. Therefore, I recommend taking a long position on Binance Coin. An ideal entry price would be around $705, aligning with the current price and the forecast. The stop loss should be set at $703.20, slightly below the support price, to minimize potential losses. The target price could be set at $723.38, the resistance price, aiming to capitalize on the potential for a price surge. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. The provided data for Stellar suggests a potential for short-term gains. While the historical price data shows some fluctuations, the recent price movements indicate a possible upward trend. The forecast price also points towards continued growth over the next week, with a projected increase towards $0.419. This positive outlook, coupled with a relatively low support price of $0.4028, suggests a favorable environment for a long position. Therefore, an investment strategy for Stellar could involve entering a long position at the current market price, which is slightly below the forecast price. A stop loss could be placed at $0.383, a recent low point, to limit potential losses. The target price could be set at $0.471, the resistance level, aiming to capitalize on the anticipated price increase. This strategy focuses on a short to medium-term investment horizon, allowing for potential profits from the expected upward momentum of Stellar. Based on the provided Toncoin price information, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a general upward trend, with recent fluctuations around the $5.50 mark. The forecast suggests a slight dip followed by a gradual increase, indicating a period of consolidation before a potential upward movement. This suggests a medium-term investment horizon allows for capturing the potential upside while mitigating the risk associated with short-term volatility. A long position on Toncoin is recommended for this strategy. The entry price should be set around $5.52, slightly below the current price, allowing for a small margin of safety. The stop loss can be placed at $5.45, protecting against a significant price decline. The target price should be set at $5.95, aligning with the resistance level and reflecting the anticipated price appreciation within the medium-term timeframe. This strategy aims to capitalize on the potential for Toncoin to break through the resistance and continue its upward trajectory. Given the price trends and forecast for Cardano, a cautious investment strategy would focus on a short-term approach, aiming to capitalize on potential price fluctuations within a defined range. The historical prices show a recent decline, with the forecast indicating further decreases in the coming week. However, the support price at $0.8498 suggests a potential floor for the price, limiting the downside risk. Therefore, a short position is recommended, targeting a price decline towards the support level. An entry price of $0.885, aligned with the recent price action, would be suitable. The stop loss should be set at $0.903, above the recent high, to protect against unexpected upward momentum. The target price should be set at $0.857, slightly above the support level, allowing for a reasonable profit potential while mitigating risk. This strategy aims to capitalize on the short-term bearish outlook for Cardano while managing risk through a defined stop loss. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears suitable. The historical prices show a general upward trend, with recent fluctuations suggesting consolidation. The forecast indicates a continued upward movement, albeit with some volatility. The support price of $99.37 provides a strong base, while the resistance at $109.75 suggests potential for further growth. Therefore, a long position is recommended to capitalize on this potential. An entry price around $100, near the current price and historical average, would be prudent. A stop-loss order could be placed at $99.37, aligning with the support price and limiting potential downside risk. The target price could be set at $109.75, aiming to capture the full potential of the resistance level. This strategy allows for a medium-term investment horizon, allowing the price to move towards the target while managing risk effectively. Based on the provided Doge-Coin price information, a short-term investment strategy appears most suitable. The historical price data shows some volatility, but the 2-week price change suggests a slight downward trend. The forecast further supports this bearish outlook, predicting a continued decline in price over the next week. While the support price at $4.0892 indicates a potential floor, the resistance at $4.7175 suggests limited upward momentum in the short term. Therefore, an aggressive short-term strategy could involve taking a short position at the current price of around $4.21. A stop loss could be placed at $4.36, slightly above the recent high and the first forecast price, to limit potential losses. The target price could be set at $4.05, aiming to capitalize on the predicted price decline while staying above the strong support level. This strategy leverages the short-term bearish outlook and aims for a quick profit within a week. Based on the provided price history and forecast for Aptos, a short-term bearish investment strategy appears to be the most suitable approach. The historical price data reveals a downward trend, with the forecast projecting further declines over the next week. The current price is hovering near the support level of $8.73, suggesting potential for a downward break. Therefore, an aggressive short-term investment strategy would involve entering a short position at $9.04, slightly above the current price, with a stop-loss set at $9.22 to minimize potential losses. The target price should be set at $8.45, aligning with the lowest forecasted price, allowing for a profitable exit before the price potentially rebounds. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop-loss. Given the price trends and forecast for SE, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $0.4185. The resistance is at $0.4267, indicating limited upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $0.425 could be considered, aligning with the forecasted price. The stop-loss should be set at $0.432 to protect against any unexpected price recovery. The target price should be set at $0.408, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.4185. The Ethereum Classic price history shows a recent downward trend, and the forecast suggests further declines. The support price is at $25.11, and the resistance is at $25.96. Given this bearish outlook, a short-term investment strategy focusing on a short position seems appropriate. The entry price could be set at $25.96, aiming to profit from the potential price drop towards the support level. To manage risk, the stop-loss should be placed at $26, slightly above the entry price. This would limit potential losses if the price unexpectedly moves higher. The target price could be set at $25.11, aligning with the support level, allowing for a reasonable profit target. This strategy capitalizes on the bearish sentiment indicated by the price history and forecast, while also incorporating risk management measures to protect potential losses. Given the price trends and forecast for Polygon, a cautious investment strategy would focus on a short-term approach, capitalizing on the potential for a slight price correction. The historical prices demonstrate a volatile period, with recent fluctuations around the 47-cent mark. The forecast suggests a downward trend, with prices potentially reaching as low as $0.429 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position on Polygon is recommended to capitalize on the anticipated price decline. An ideal entry price would be around 47 cents, aligning with the current price and recent highs. To manage risk, a stop-loss order should be placed at 49 cents, above the current price, to limit potential losses if the price unexpectedly rises. The target price could be set at 43 cents, slightly above the forecasted lowest price, allowing for profit-taking before reaching major support levels. This strategy aims to profit from short-term price fluctuations while minimizing risk. Given the historical price data and the bearish forecast for AEVO, a short-term investment strategy focusing on a short position appears to be the most suitable approach. The historical price data shows a slight upward trend, but the forecast indicates a downward movement over the next week. The current price is close to the support level of $0.362, suggesting a potential for a further decline. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, around $0.362. A stop-loss order should be placed at $0.3827, the resistance level, to limit potential losses if the price unexpectedly rises. The target price for this short position could be set at $0.339, the lowest forecasted price. This strategy aims to capitalize on the anticipated downward price movement and secure profits before the price potentially rebounds. Based on the provided price history and forecast for optimism, a cautious short-term investment strategy appears most suitable. The price history reveals a fluctuating trend with recent declines, while the forecast predicts further decreases in the coming week. This suggests a bearish outlook in the short term. Therefore, an investment strategy involving a short position is recommended. A conservative entry price could be set at $1.85, slightly above the current price, but below the resistance level. A stop-loss should be placed at $1.90 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.70, aligning with the forecast's lowest price point and providing a reasonable profit margin before reaching the support level. Given the provided price history and forecast for STRK, a cautious short-term investment strategy is recommended. The price history shows a volatile trend with recent fluctuations around the 47 cents mark. While the forecast suggests a slight downward movement in the coming week, the price is currently hovering near its support level of $0.4689. This proximity to support suggests potential for a bounce back. Therefore, a short position is advisable with an entry price at $0.473, slightly above the current price. This allows for a small margin of safety while still capitalizing on the potential downward movement. The stop-loss should be set at $0.478 to limit potential losses if the price unexpectedly surges. The target price can be set at $0.462, aligning with the forecasted price movement and offering a reasonable profit margin. This strategy aims to capitalize on the short-term downward trend while mitigating risk by utilizing a tight stop-loss and targeting a conservative profit. Given the price trends and forecast for Solana, a conservative investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, with the current price hovering near the support level of $184.22. While the forecast suggests a slight decline in the coming week, it still indicates a price range above the support level. This suggests a potential for sideways movement or a minor pullback before resuming an upward trend. Therefore, a long position is advisable, aiming to capitalize on the potential for a price increase towards the resistance level of $195.42. An entry price around $188 would allow you to buy in near the current price while avoiding the immediate dip forecasted. The stop-loss should be set at $184, slightly below the support level, to protect against a significant drop. The target price could be set at $193, aiming for a moderate profit before the resistance level is reached. This strategy allows for potential gains while managing risk through a well-defined stop-loss. Given the price trends and forecast for Jupiter, a conservative investment strategy would focus on a short-term approach. The historical prices show a somewhat volatile trend, with recent fluctuations suggesting a potential for further short-term price movement. The forecast indicates a downward trend, suggesting Jupiter could drop from its current level. The support price at $0.7993 acts as a potential floor for the price, while the resistance level at $1.0505 suggests an upper limit for potential gains. Considering these factors, a short position is advisable. An entry price of 83 cents could be considered, aligning with the recent price action and the downward forecast. A stop loss at 85 cents would limit potential losses if the price unexpectedly moves higher. The target price should be set at 78 cents, slightly above the forecast's lowest point, allowing for profit taking before reaching the support level. This strategy aims to capitalize on the anticipated short-term decline while managing risk effectively. Based on the provided data for render, a cautious investment strategy is recommended for the short term. The 2-week price history reveals a fluctuating trend with recent declines, aligning with the forecast that suggests further price drops in the coming week. The support price sits at $6.793, indicating a potential floor for the price. However, the forecast's lowest point is $6.78, indicating a very slight dip. Therefore, a short-term short position is suggested. An entry price of $6.85, slightly above the current price, allows for a small buffer against immediate price fluctuations. The stop loss should be set at $6.95 to limit potential losses if the price unexpectedly rebounds. The target price is set at $6.75, aiming to capitalize on the anticipated decline while remaining conservative. This strategy prioritizes risk management and aims to capture modest profits from the predicted short-term price movement. Given the historical price data and the provided forecast for Solana name service, a short-term bearish strategy appears to be more suitable. The 2-week price history shows a fluctuating trend with a slight downward bias. The forecast predicts a continuous decline in price over the next week, reaching as low as 23 cents. Considering this, a short position is recommended to capitalize on the anticipated price decrease. For this strategy, an entry price of $0.252 would be appropriate, allowing for a small margin above the current price. The stop loss should be placed at $0.255 to limit potential losses if the price unexpectedly rises. The target price is set at $0.235, aiming to capture a significant portion of the anticipated decline while leaving room for potential price fluctuations. This strategy focuses on a short-term investment horizon, aiming to profit from the expected price drop within the next week. Based on the provided Doge-Coin price information, a cautious investment strategy would be to take a short-term long position. The historical price data shows a slight upward trend, with the price hovering around the support level of $0.31201. While the forecast suggests a slight decline in the coming week, the current price is relatively close to the support level, indicating potential for a bounce back. Therefore, an aggressive short-term strategy would involve entering a long position at the current market price, around $0.317. A stop loss could be placed at $0.31201, the support level, to limit potential losses. The target price could be set at $0.324, a recent resistance level, aiming to capitalize on a potential price rebound. This strategy acknowledges the short-term bearish forecast, but focuses on the potential for a short-term price surge towards the resistance level. Based on the provided price information for PEPE, a bullish investment strategy appears promising. The historical price data reveals a generally upward trend, with recent fluctuations around the $0.0000180 mark. The forecast indicates continued upward momentum, suggesting that the price could reach $0.0000194 within the next week. This positive outlook, coupled with the support price at $0.0000193, strengthens the case for a long position. Therefore, I recommend a long-term investment strategy for PEPE. An entry price around $0.0000180, aligning with the current price and the forecast, would be suitable. To manage risk, a stop-loss order at $0.0000179 could be implemented, ensuring protection against unexpected price drops. The target price could be set at $0.0000194, aligning with the highest projected price in the forecast, allowing for potential profits as the price moves towards the resistance level of $0.0000203. $1. Based on the provided data, SHIB Inu exhibits a volatile price history with a recent downward trend. The forecast suggests further price declines in the coming week. Considering this bearish outlook, a short-term short position appears to be the most suitable strategy. $2. Given the current price hovering near the support level of $0.0000211, an aggressive short-term investment strategy could involve entering a short position at $0.0000212. The stop loss should be set at $0.0000217 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.0000203, aligning with the lowest forecasted price, allowing you to secure profits before the market potentially finds support. Based on the provided price information for Dog with Hat, a short-term investment strategy appears most suitable. The 2-week price history demonstrates a downward trend, with the forecast indicating further declines. The historical prices have been consistently dropping, reaching as low as $1.82 in the recent past. The forecast predicts a continued decline to $1.46 over the next week, suggesting a bearish outlook in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on Dog with Hat. A suitable entry price would be $1.87, aligning with the current price and the recent downward trend. The stop loss should be set at $1.92 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $1.60, slightly above the forecasted lowest price, allowing for profit taking before the market potentially finds support. Given the price trends and forecast for Altcoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $0.006215 and the resistance at $0.007435. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.00647, slightly above the recent lows, would allow for a small margin of safety. The stop loss should be set at $0.00666 to protect against any unexpected price surges. The target price should be set at $0.00600, slightly above the forecast low, allowing you to take profits before the market potentially finds support. This strategy aims to take advantage of the short-term bearish momentum in Altcoin while managing risk effectively. Based on the provided near-protocol price history, forecast, support, and resistance levels, a short-term bearish strategy appears most suitable. The 2-week price change shows a downward trend, and the forecast predicts further declines over the next week. The price is currently hovering near the resistance level of $5.354, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price of approximately $5.20. A stop-loss order should be placed at $5.354 to limit potential losses if the price unexpectedly rises. The target price for this trade could be set at $4.944, aligning with the support price level. This strategy aims to capitalize on the anticipated price decline and secure profits before the price potentially rebounds. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $9.903. The forecast suggests a further decline in prices over the next week, reaching as low as $9.79. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $9.95 would allow you to enter the trade slightly above the current price, minimizing the risk of an immediate reversal. The stop loss should be set at $10.05 to protect against any unexpected price surges. The target price should be set at $9.75, aligning with the forecasted low point and allowing for a potential profit before the price potentially finds support at $9.903. Based on the provided injective price information, a cautious short-term investment strategy appears suitable. The 2-week price history reveals a general downward trend, with the forecast predicting further declines. The current price sits near the support level of $19.69, suggesting a potential for a temporary bounce. However, the forecast indicates a continuation of the downward trend in the following week, reaching as low as $17. Therefore, a short position is recommended to capitalize on this anticipated price decrease. An entry price of $20, slightly above the current price, allows for a small buffer against unexpected price fluctuations. The stop loss should be set at $21, above the entry price, to minimize potential losses if the price unexpectedly rises. The target price is set at $18, aligning with the forecast's lowest price prediction, aiming to secure profits before the price potentially rebounds. This strategy prioritizes risk management while seeking to profit from the anticipated short-term decline in injective. Given the price trends and forecast for BTC, a medium-term investment strategy appears most suitable. The historical prices show a general upward trend, with recent fluctuations indicating potential consolidation. The forecast suggests a slight dip followed by a gradual increase, aligning with the medium-term bullish outlook. This suggests that BTC may be poised for a sustained upward move over the next few weeks. Therefore, an investment strategy involving a long position is recommended. An entry price around $460 would allow you to capitalize on the anticipated price increase. A stop loss at $445 would protect your investment from significant downside risk. The target price could be set at $500, capitalizing on the projected upward movement while leaving room for potential fluctuations. This strategy aims to capture the medium-term growth potential of BTC while mitigating risks through a well-defined stop loss and a conservative target price. Given the historical price data and the provided forecast for THETA network, a short-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating pattern with recent upward movement. However, the forecast suggests a slight downward trend in the coming week, indicating a potential for price correction. Therefore, a short position is recommended to capitalize on this anticipated price decline. An entry price around $2.30 would be ideal, allowing for entry near the current price level. The stop loss should be placed at $2.35 to limit potential losses if the price unexpectedly rises. The target price could be set at $2.15, aligning with the lower end of the forecast and offering a reasonable profit margin. This strategy aims to capitalize on the short-term price fluctuations while managing risk effectively. Based on the provided information for WorldCoin, a short-term bearish investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. While the support price sits at $2.177, the forecast suggests prices could drop below this level. Therefore, a short position is recommended to capitalize on the anticipated decline. An entry price of $2.20 aligns with the current price and the forecast's initial decline. The stop loss should be set at $2.25 to protect against potential upward surprises. The target price should be set at $2, aiming to profit from the predicted price drop while remaining conservative and avoiding chasing the lowest point. This strategy focuses on short-term gains by leveraging the anticipated bearish momentum in WorldCoin. Based on the provided price history and forecast for Hooked Protocol, a short-term investment strategy appears to be the most suitable approach. While the historical price shows some upward movement, the forecast indicates a slight decline over the next week. This suggests that the price may consolidate or experience a minor pullback in the short term. Considering this, a short position with an entry price around $0.415 would be advisable. This allows for a potential profit if the price drops towards the forecast low of 41 cents. The stop loss should be set at $0.424 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.404, aiming to capture a portion of the potential decline while leaving room for price fluctuations. This strategy capitalizes on the short-term bearish sentiment indicated by the forecast while managing risk through a well-defined stop loss. Given the historical price data for Artificial Superintelligence Alliance and the provided forecast, a cautious investment strategy is recommended. The 2-week price change shows a fluctuating trend with periods of both gains and losses. The forecast indicates a downward trajectory for the next week, suggesting a potential for further decline. While the support price sits at $1.279, offering a potential floor, the resistance level at $1.362 suggests limited upward potential in the near term. Considering these factors, a short position on Artificial Superintelligence Alliance appears to be the most suitable strategy. A conservative entry price could be around $1.32, aligning with the recent price action and providing a buffer above the immediate support level. The stop loss should be set at $1.36, slightly above the entry price, to minimize potential losses. The target price could be set at $1.25, aligning with the lower end of the forecast and offering a reasonable profit potential. This strategy prioritizes risk management while aiming to capitalize on the anticipated downward price movement. Polkadot's recent price history shows a volatile trend with both upward and downward movements. The forecast suggests a slight downward movement over the next week. Considering the support price at $6.656 and the resistance price at $8.389, a short-term investment strategy focusing on a short position appears to be the most suitable. An entry price of $7, close to the current price, would allow you to capitalize on the potential price decline. The stop loss should be set at $7.12, slightly above the entry price, to minimize potential losses. The target price could be set at $6.70, taking into account the support level and the forecast. This strategy aims to profit from the anticipated downward movement in the short term while managing risk effectively. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent decline, and the forecast indicates further decreases in the coming week. The support price sits at $4.917, suggesting a potential floor for the price. However, the resistance at $6.733 indicates a significant barrier to upward movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy would involve entering a short position at $5.13, the current price close to its recent high. The stop loss should be set at $5.22, slightly above the current price, to protect against any unexpected upward movement. The target price should be set at $4.83, aligning with the lower end of the forecast and below the support level, allowing you to take profits before the price potentially bounces back. Based on the provided price history and forecast for Conflux, a short-term bearish strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with a slight downward bias in the past 2 weeks. The forecast further indicates a continued decline in price over the next week, reaching as low as 15 cents. This suggests that the downward momentum might persist in the short term. Considering this bearish outlook, a short position on Conflux is recommended. An entry price of $0.164, slightly above the recent price action, allows for a buffer against potential minor price fluctuations. The stop loss should be placed at $0.167 to limit potential losses if the price unexpectedly rallies. The target price is set at 15 cents, aligning with the forecast's lowest price prediction, aiming to capitalize on the anticipated decline. This strategy emphasizes a short-term perspective, capitalizing on the projected price drop while managing risk through a well-defined stop loss. Given the current price trend and the forecast for Ethereum name service, a short-term investment strategy appears to be the most suitable approach. The historical prices show a recent decline, and the forecast suggests a continuation of this downward trend. The support price of $32.88 serves as a potential floor for the price, while the resistance at $42.53 indicates a significant hurdle for any upward movement. Therefore, a short position on Ethereum name service is recommended. An aggressive entry price could be around $34, aligning with the current price and the forecast's initial downward movement. To manage risk, a stop loss should be set slightly above the entry price at $34.50. This allows for a small price fluctuation before triggering the stop loss. The target price could be set at $31, anticipating a decline towards the support level. This strategy capitalizes on the anticipated short-term price decline while incorporating risk management measures to protect potential losses. Based on the provided price information for Avalanche, a cautious investment strategy would be recommended. The 2-week price change demonstrates a downward trend, and the forecast suggests this trend might continue. While the support price is at $35.81, the forecast prices are consistently below the current price, indicating a potential for further decline. Considering this bearish outlook, a short position could be considered. An entry price of $37, aligned with the current price and slightly above the support level, would allow for some buffer. The stop loss should be set at $38 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $35, aiming to capitalize on the anticipated price decline towards the support level. This strategy focuses on mitigating risk while potentially profiting from the foreseen downward movement in Avalanche. Based on the provided Vecane price history and forecast, a cautious investment strategy focused on the short term appears most suitable. The historical prices exhibit a fluctuating trend, and the forecast suggests a potential decline in the coming week. The current price is hovering near the support level of $0.04337, indicating a potential for a short-term bounce. However, the forecast prices suggest a downward trajectory, with the lowest predicted price at $0.0438. Therefore, a short-term short position on Vecane is recommended. An entry price of $0.0455 aligns with the current price and allows for a small profit margin. The stop loss should be set at $0.0469 to mitigate risk if the price unexpectedly rises. The target price should be set at $0.0438, capitalizing on the predicted decline. This strategy aims to profit from the anticipated short-term price correction while minimizing potential losses. Based on the provided price information for PENDLE, a cautious short-term investment strategy is recommended. The historical price data reveals a fluctuating trend, with recent fluctuations suggesting a potential consolidation phase. The forecast prices indicate a slight downward movement over the next week, aligning with the recent price trend. Considering the support price of $4.893 and the resistance price of $5.427, there is a possibility for PENDLE to find support around the current price levels. Therefore, a short position could be considered with an entry price near $5.08, the current price. A stop loss should be placed at $5.26, slightly above the recent high, to minimize potential losses. The target price could be set at $4.89, aiming to profit from the anticipated downward movement. This strategy focuses on capitalizing on short-term price fluctuations within a defined risk range. Given the price trends and forecast for the sandbox, a short-term investment strategy focused on a long position appears promising. The historical prices show a slight upward trajectory, despite some fluctuations. The current price is near the support level of $0.5423, indicating potential for further growth. The forecast suggests the sandbox could rise to $0.599 in the coming week, aligning with the historical upward trend. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price around $0.552. A stop-loss order should be placed at $0.5423 to limit potential losses if the price drops below the support level. The target price should be set at $0.607, slightly above the highest forecasted price, allowing for a healthy profit margin while leaving room for further potential upside. This strategy capitalizes on the anticipated price increase towards the resistance level of $0.7932, while mitigating risk through a well-defined stop-loss order. Based on the provided information for Decentraland, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent highs around $0.539 and lows near $0.468. While the forecast suggests a slight downward movement, the price is currently hovering around the support level of $0.4692. This indicates a potential for a short-term rebound before any significant decline. Therefore, a long position is recommended with an entry price around $0.476, close to the current price and above the support level. A stop loss should be set at $0.4692, slightly below the support price, to limit potential losses. The target price could be set at $0.503, aligning with the forecast and representing a reasonable profit margin. This strategy aims to capitalize on a potential short-term price increase before the predicted downward trend takes hold. ENG Coin's historical price shows a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast price suggests a further dip in the coming week, indicating a bearish sentiment in the short term. The support price at $0.2107 acts as a potential floor for the asset, while the resistance at $0.3264 presents a significant hurdle for upward movement. Considering these factors, a short-term investment strategy focusing on a short position seems appropriate. An aggressive short-term strategy could involve entering a short position at the current price around $0.221. The stop loss should be placed slightly above the recent high, around $0.231, to limit potential losses in case of an unexpected price surge. The target price could be set at $0.2107, the support level, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the bearish outlook and aims to profit from the potential drop towards the support level. Given the price trends and forecast for Uniswap, a cautious investment strategy would focus on a short-term approach. The historical prices show a period of consolidation around $13, with minor fluctuations. The forecast indicates this trend is likely to continue, with prices remaining stable around $13 for the next week. While there's a slight possibility of a slight upward movement, the resistance level at $15.233 suggests that significant gains are unlikely in the short term. Therefore, a long position is not recommended at this time due to the limited potential for substantial price appreciation. A short-term strategy could involve waiting for a clear breakout above the resistance level or a decisive drop below the support price of $13.018 before considering entering a position. Until then, it's advisable to observe the price action and wait for a more compelling entry opportunity. Based on the provided Chainlink price information, a bearish investment strategy appears to be more suitable. The 2-week price history demonstrates a clear downward trend, and the 1-week forecast predicts further declines, consistently staying below the current price. This suggests a lack of upward momentum and a potential for continued price depreciation. Given this bearish outlook, a short position on Chainlink is recommended. An aggressive short-term investment strategy could involve entering a short position at the current price of $21. A stop loss should be placed at $22, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $15.28, the identified support price, aiming to capitalize on the predicted decline. This strategy capitalizes on the anticipated price drop while managing risk through a strategically placed stop loss. Based on the provided historical price data and the 1-week forecast for Aave, a medium-term investment strategy appears most suitable. The historical prices show a general upward trend, with recent fluctuations around the $320 price level. While the forecast suggests a slight decline in the short term, it also indicates a potential rebound towards the end of the forecast period. This suggests that the medium-term outlook for Aave remains positive. Therefore, a long position is recommended. An ideal entry price would be around $320, aligning with the current price range and the forecast's anticipated rebound. To manage risk, a stop-loss order could be placed at $309, the support price, to limit potential losses. The target price could be set at $387, the resistance price, aiming to capitalize on the potential for a significant price increase. This strategy allows for participation in the potential upside of Aave while mitigating downside risk through a well-defined stop-loss. Based on the provided EOS price information, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent dips, while the forecast suggests further short-term declines. However, the support price at $0.7713 indicates a potential floor for the price, suggesting a possible rebound in the medium term. Therefore, I recommend adopting a long position with an entry price around $0.775, slightly above the support level. This allows for a margin of safety while capturing potential upside if the price rebounds. The stop-loss should be set at $0.765, close to the immediate support, to minimize potential losses. The target price can be set at 84 cents, aligning with the recent highs and representing a reasonable profit target for the medium term. This strategy balances risk and reward, capitalizing on the potential for a price rebound while mitigating downside risk. Based on the provided TROM price data and forecast, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a consistent upward trend, and the forecast suggests continued growth, peaking around $0.274 in the coming weeks. The support price of $0.2444 acts as a strong foundation, indicating a floor for potential price dips. Therefore, I recommend entering a long position at the current price of $0.255, with a stop-loss set at $0.2444 to limit potential losses. The target price should be set at $0.274, aiming to capitalize on the projected price increase. This strategy allows for a balanced approach, leveraging the positive price momentum while mitigating risk through a well-defined stop-loss. Given the price trends and forecast for Suncoin, an investment strategy focusing on a short-term approach appears most suitable. The historical prices demonstrate an overall upward trend, with the current price hovering near the support level of $0.02429 and the forecast suggesting continued upward movement towards $0.0259. The resistance level at $0.0261 indicates a potential ceiling for this short-term rally. Therefore, a long position is recommended to capitalize on this potential price increase. An aggressive entry price of $0.0243 would allow you to buy in close to the current price. A stop-loss order at $0.02429, slightly below the support level, would help protect against unexpected price drops. The target price should be set at $0.0259, aligning with the highest forecasted price, allowing you to maximize potential profits from this short-term upward movement.